Hello, and welcome to our channel. Have you ever stopped to consider the power of technology and its impact on our financial systems? In a world where digital currencies are challenging traditional financial paradigms, one innovation stands out: Bitcoin ETFs. Today, we delve into this fascinating development that's taking Wall Street by storm. So sit back, open your mind, and let's embark on this enlightening journey together. Let's start from the basics. An ETF, or exchange-traded fund, is a type of investment fund and exchange-traded product that is traded on stock exchanges, much like individual stocks. They are designed to track the performance of a specific index, sector, commodity, or asset like gold or oil. Now, a Bitcoin ETF, as the name suggests, is an ETF that tracks the price of Bitcoin. But here's the catch: when you invest in a Bitcoin ETF, you don't actually own any Bitcoin. Instead, you own shares in the ETF, and the ETF owns the Bitcoin. The performance of your investment, therefore, is tied to the performance of Bitcoin. Why is this significant? Well, Bitcoin ETFs provide a way for investors to gain exposure to Bitcoin without having to deal with the complexities of buying and storing Bitcoin, such as setting up a digital wallet, managing private keys, or dealing with potential cybersecurity threats. This makes Bitcoin ETFs an attractive option for both individual and institutional investors who want to tap into the Bitcoin market without the associated operational risks. Moreover, Bitcoin ETFs are traded on traditional exchanges, which means they are subject to the same regulatory oversight as other financial products. This provides an additional layer of security for investors, as the ETF providers are required to comply with a range of regulatory requirements designed to protect investors. In summary, Bitcoin ETFs represent a significant evolution in the way investors can access and invest in the Bitcoin market. They combine the potential rewards of Bitcoin investment with the ease and security of traditional financial markets. Bitcoin ETFs are a game-changer in the financial world for several reasons. 1. Accessibility. Bitcoin ETFs make the Bitcoin market more accessible to a wider range of investors. Buying and selling ETFs is as straightforward as trading regular stocks on an exchange. This simplicity lowers the entry barrier for individuals and institutions who want to invest in Bitcoin but are deterred by the complexities of handling cryptocurrencies. 2. Diversification. Bitcoin ETFs allow investors to diversify their portfolios without the need to directly own Bitcoin. This is particularly beneficial for risk-averse investors who want to gain exposure to the potential upside of Bitcoin without exposing themselves to the high volatility associated with direct Bitcoin ownership. 3. Regulation. Bitcoin ETFs are regulated financial products. This means they come with a certain level of investor protection that isn't always present in the cryptocurrency market. For instance, ETF providers are required to meet specific regulatory standards and are subject to oversight by financial authorities. 4. Liquidity. ETFs are traded on major stock exchanges and can be bought and sold throughout the trading day at market prices. This provides investors with the flexibility to react quickly to market movements, which is particularly important given the volatile nature of Bitcoin prices. 5. Cost efficiency. Bitcoin ETFs provide a cost-effective way for investors to gain exposure to Bitcoin. Direct investment in Bitcoin may involve additional costs such as transaction fees, digital wallet fees, and fees related to the secure storage of Bitcoin. These costs can be avoided with Bitcoin ETFs. Bitcoin ETFs play a crucial role in bridging the gap between traditional finance and the world of cryptocurrencies. They represent a significant step towards the mainstream adoption of Bitcoin and could potentially shape the future of global finance. Wall Street, the heart of the global financial system, has always been known for its adaptability and foresight. The rise of Bitcoin ETFs is a testament to this. The launch of Bitcoin ETFs on Wall Street signifies a major shift in the financial landscape. It represents a merging of the traditional financial world with the innovative realm of cryptocurrencies. This is significant for several reasons. 1. Mainstream acceptance. The fact that Bitcoin ETFs are now being traded on Wall Street shows that Bitcoin has gained mainstream acceptance. It's no longer viewed as a fringe asset, but as a legitimate part of the financial ecosystem. 2. Institutional investment. Bitcoin ETFs have opened the doors for institutional investors to enter the Bitcoin market. These are large organizations like banks, pension funds, and insurance companies. Their participation brings a huge influx of capital, which can drive the growth of the Bitcoin market. 3. Regulatory clarity. The approval of Bitcoin ETFs by regulatory authorities provides much-needed regulatory clarity. This helps reduce the uncertainty that has traditionally surrounded Bitcoin, making it a more attractive investment. 4. Market stability. With more institutional investors participating in the Bitcoin market through ETFs, the market can potentially become more stable. Institutional investors tend to take a longer-term view compared to retail investors, which can help reduce market volatility. 5. Improved market efficiency. Bitcoin ETFs can contribute to improved market efficiency. They provide a way for price discrepancies between the Bitcoin spot market and the futures market to be arbitraged away, leading to more efficient pricing. The advent of Bitcoin ETFs on Wall Street is a significant milestone in the financial industry's acceptance of Bitcoin. It's a clear sign that cryptocurrencies are becoming an integral part of our financial system. If you like this video and want to see more videos like this, subscribe. The impact of Bitcoin ETFs on the financial market is profound and multifaceted. Let's break it down. 1. Democratizing Bitcoin investment. Bitcoin ETFs have democratized access to Bitcoin investment. By eliminating the need to manage digital wallets or private keys, they have made it easier for everyday investors to gain exposure to Bitcoin. This has broadened the investor base for Bitcoin, which was previously dominated by tech-savvy individuals and cryptocurrency enthusiasts. 2. Boosting liquidity. By attracting more investors, Bitcoin ETFs have boosted the liquidity of the Bitcoin market. Higher liquidity tends to reduce price volatility and make the market more efficient. This makes Bitcoin a more attractive investment, further increasing its investor base. 3. Enhancing market transparency. Bitcoin ETFs are required to disclose their holdings on a daily basis. This enhances market transparency and allows investors to make more informed decisions. It also helps regulators monitor the market more effectively. 4. Promoting regulatory compliance. Bitcoin ETFs are subject to the same regulatory standards as other ETFs. This promotes regulatory compliance in the Bitcoin market, which can help prevent fraudulent activities and protect investors. 5. Driving institutional adoption. Perhaps the most significant impact of Bitcoin ETFs is that they have driven institutional adoption of Bitcoin. Institutions such as pension funds and endowments typically have strict investment policies that prevent them from holding cryptocurrencies directly. Bitcoin ETFs provide a regulated and familiar format for these institutions to gain exposure to Bitcoin, driving its adoption at an institutional level. The impact of Bitcoin ETFs extends beyond the Bitcoin market. By bridging the gap between the traditional financial system and the world of cryptocurrencies, they have the potential to reshape the entire financial landscape. The future of Bitcoin ETFs is a topic of great interest to investors and financial analysts alike. As we look ahead, there are several trends and factors that could shape the trajectory of Bitcoin ETFs. 1. Regulatory developments. The regulatory landscape for Bitcoin ETFs is still evolving. Future decisions by regulatory bodies like the Securities and Exchange Commission, SEC, will play a crucial role in determining the growth and acceptance of Bitcoin ETFs. Positive regulatory developments could lead to an increase in the number of Bitcoin ETFs and attract more investors. 2. Market adoption. The adoption of Bitcoin ETFs by investors is another key factor. As more investors become aware of the benefits of Bitcoin ETFs, we could see increased demand, which would boost the growth of Bitcoin ETFs. 3. Technological advancements. Technological advancements in blockchain technology and digital assets could also impact the future of Bitcoin ETFs. For instance, improvements in blockchain technology could make Bitcoin transactions faster and more efficient, making Bitcoin ETFs even more attractive to investors. 4. Economic factors. Economic factors such as inflation, interest rates, and economic growth can influence the price of Bitcoin and, by extension, Bitcoin ETFs. Investors will need to keep a close eye on these factors. 5. Institutional interest. Institutional interest in Bitcoin ETFs is likely to grow. As more institutions recognize the potential of Bitcoin as a digital asset, they may increasingly turn to Bitcoin ETFs as a way to gain exposure to this asset class. In conclusion, while the future of Bitcoin ETFs is not set in stone, the trends suggest a promising outlook. As with any investment, potential investors in Bitcoin ETFs should conduct thorough research and consider their risk tolerance before investing. That's all for today's video on Bitcoin ETFs taking Wall Street by storm. We hope you found this video informative. If you did, Don't forget to give this video a thumbs up and share it with your friends. Stay tuned for more updates on the latest financial trends. Until next time, happy investing.